Support for CFO Thought Leader comes from Plantful and U.S. Bank. CFO Thought Leader is pleased to feature this episode of the Controllers Classified podcast, hosted by Erik Zhou, Chief Accounting Officer of Brex.
Welcome to Controllers Classified, the podcast where we take a deep dive into the dynamic world of controllers, accountants, and finance leaders, and hear how their ever-evolving roles are redefining accounting and the future of business. And now, here's your host, Erik Zhou.
Welcome to Controllers Classified. I'm your host, Erik Zhou, CAO at Brex. And today we're diving deep into change management in the accounting and finance function. This is something we actually talk a lot about with our customers at Brex, especially in the context of optimizing their accounting close process. And to help me with discussing this topic today, I'm thrilled to introduce Jessica Peng, Controller at Invoca, onto the show. Like me, Jessica spent many years in client service prior to transitioning to industry, and she's seen change management in all of its forms, which have shaped her perspective on the topic. Thanks for joining me today, Jessica.
Thank you for having me.
Maybe just to get started, how did you get into client service? And then what drove you to get into the client side?
I think it's just as many kind of young accounting students, your kind of dream, you've been told by the people before you to say, hey, get into the Big Four. It's a really good kind of launching pad for whatever else you want to do within accounting. And I felt like I just fell into that track like many other people, like including you.
And were you recruited at your school for that Big Four job? That's what happened to me. Like I was matriculating through my university and all the Big Four were kind of hosting sessions and trying to recruit.
It's actually a little bit more interesting in my case. It kind of yes and no. The school I was attending my master's at was actually, they didn't have a specific accounting program. So they didn't have Big Four on campus to recruit. I actually had to go next door to another university that had an accounting program and actually went there and talked to the people over there, ended up getting my applications through that way.
I grew up in the practice. So I was at Pricewaterhouse for a long time. I spent 11 years there. I spent time East Coast, West Coast. My time was auditing all kind of like multinational big financial institutions. When you were in the Big Four, did you focus on any particular industry?
So I was part of the advisory group. So it's a little different. We tend to, even though I did a lot of audit, we are more specialized audit. We tend to have more of a focus on internal controls over there. So instead of at least the time when I was there, they just did financial services and non-financial services. So I was in non-financial services, which meant I cover across multiple industries just because I was in the tri-state area. So New York, Connecticut, and New Jersey, they have a lot of life science. They have a lot of consumer products. So that's kind of where I end up spending a lot of my time in.
Tell me a little bit about what the major projects were. Were you working on like SOX implementation or was it kind of existing SOX programs and improving them?
Kind of both. So I've done implementation more on the advisory side to help them think through what kind of controls they want to put in place. But more so when I spend time on the audit side, it's existing controls and go in there and audit their controls, their business processes. I've done some substantive testing, but not to the same extent that you've done, obviously.
Yeah. When you go through the implementation for SOX, are the companies mostly like going IPO soon and they're trying to get ready, or are they already public?
I think they're already public. My understanding is I think you have 5 years to implement SOX after you IPO. So that gives you some time. And I think companies tend to really take their sweet time with that.
I think that's actually for companies that qualify under the Jobs Act. So when you're under the Jobs Act, you're like small enough so that you don't have to be SOX compliant within the first 5 years of your operations as a public company. But I think a lot of companies, if you're large enough, by the time you file your second 10K, you need to have a controls opinion attached from your auditor. So it's usually less than 24 months, I would say. That being said, for the SOX implementation, if there are companies that kind of like have been public for a while, they didn't need to necessarily be SOX compliant. I mean, that year of transition is typically somewhat jarring, right? So like, what were the biggest pain points for those clients as they were getting into becoming SOX compliant?
What I've seen is you kind of need to strike the balance between efficiency and effectiveness. You need to be efficient enough to pass the SOX, but you need to be effective enough to pass the SOX, but then you need to be efficient enough so you don't cripple your operations with SOX.
And what are the ways that, like, I guess what's an example of SOX crippling your process?
When you have one of the controls in kind of, especially in the IT, in the system space, is you need to do user recertification supposedly every year. And then most of the company can never get it done because to get into that level of detail, it takes hours to review like everyone's roles, what things they do. They just always come back and say, hey, we have so many other things going on in our day job. We just don't have time for it.
Just for our audience and to make sure we all understand, can you define what user recertification is?
So basically, the purpose of it is really making sure that the users to a financial system, like your banking system or your ERP system, that they only have access as needed. And also anyone that left the company should no longer have access. So obviously, they should have efficient ways of removing people's access, but people being people, there's always things that could get missed. So recertification is meant to capture those kind of things. People that terminated should no longer have access. People that have transferred should no longer have their old access, things like that.
Tell me what happens what's the risk there? Why is that a control that's necessary for SOX?
It's not necessarily a direct control that's spelled on the SOX, but it's one of the controls that's meant to mitigate the risk of inappropriate users having access to sensitive financial systems.
And okay, so when I was in audit, this was actually something that my clients always got control exceptions on. We ended up it's very difficult, especially for very large companies. Let's say you have a company that has 30, 40, 50,000 employees, and they all have different access to different systems. The user recertification, especially if it's manual and you're looking through them, oh my gosh, it would take an army to review all that once a year. So they do it in quarterly cycles for different pockets and populations. And they have to thoroughly document it because as an auditor, I have to have the information readily available to prove that you kind of did the control. At the end of the day, something I always experienced was, yeah, there were some lapses. And then they were like, okay, then there's this army of other mitigating controls that they would point to. So just out of curiosity, was that something you also work with clients on, or were there some end all be all controls that, you know what I mean? At the end of the day, people need to have backup plans.
Yeah, well, first of all, I would say we're both talking about history. Nowadays, with a lot of the automation that's in place, this becomes much easier. Mm-hmm. For example, if you have a lot of for the viewers out there, a lot of you guys probably have single sign-on. That's a very effective control where if someone leaves and their access gets taken away from their single sign-on, they don't have access to a million other systems, then that's one of those kind of be-all controls that was much harder to do back probably in our days. We're talking about even 10 years ago, it's much harder to do. So that's one. And then, yes, even when we're the auditor, we do try to work with our client to figure out what are the mitigating factors that are available. And generally what they try to do is they try to prove that even though this access shouldn't be there, this person never logged on after they terminate tend to be our go-to control right after we find an exception.
What about on the financial statement side? So when it comes to financial reporting, were there any specific controls that were a big focus area for you when you were doing client service?
I'm thinking maybe more so on the reports themselves generated from the system. Sometimes kind of those you would take for granted that a report coming from the system's got to be right. And that's actually not necessarily the case when in our audit world.
I experienced that a lot. So, when we go through a manual control, let's say that had some IT dependencies. So we would have someone on the client side and their accounting team relied on a canned report, right? So an automated report coming out of a key system. And that's all great, right? The system, let's say the IT controls around the system have tested, they're good. But then on the key report, they kind of just take reliance on it. And when I ask them, well, where do these numbers come from? They say, oh, they come from the system. And then I'm like, oh, but how did the numbers get into the system? And they're like, oh, I don't know. This is the report from the system. And that can be a very jarring experience for some of those clients that I used to deal with, because they didn't necessarily have all the information. And that's it. Like, those are just stories I had. And then oftentimes we would have to do some kind of advisory work with them. And then they would go through the change management. Like, that brings us to the topic of today. How have your experiences on the client side shaped what you do now as a controller?
I would say one is having been on the other side, you kind of have a different level of interaction with your current auditors. So a very good example is, if you've never done it, a lot of times people take the words of auditors as God. If they ask for something, they will boil the ocean to provide it. But being on the other side, I generally with questions like, okay, how important is it really? What are you trying to achieve? Is this really something you absolutely need, or is it something that you can take an alternative approach to?
I cannot tell you how much that resonates with me. I was an auditor for a long time, and having made many requests of my clients, I didn't appreciate it at the time, but when I made those requests, often I didn't give enough context that would have been valuable to them. Because there are a lot of requests that, I sent out that, I hope I'm not giving away the farm here in case there are other auditors listening, but sometimes those requests are nice to haves. Right.
Okay.
It's just, something that if you could give me, I would fill up my audit bucket just a little bit more and make, this audit file a little bit stronger. But will it stop me or my team or my firm from signing the opinion at the end of the audit cycle? There are a lot of requests. I mean, not like everything, almost, I would say probably like 85, 90% of requests are certainly like must-haves, cash confirms, legal letters, things of that nature. But there were always like these follow-on requests that were almost curiosities, almost like just so I can understand and put it in the file, and I think there's definitely something to be said there, having been auditors and bringing that flavor to my team so that we can manage the cycle more.
Yeah, and another part related to that is, even for the ones that are must-haves, they usually work around it. So kind of keeping in mind what they're looking for, what kind of having a better understanding of what the auditors tend to be looking for, you can better come up with alternatives that probably are just acceptable, but way less taxing on your team. A lot of times what I end up pushing back on is materiality. For example, if they're really trying to reconcile like $100 difference, I'm like, come on, what's your materiality? I know the whole drill with materiality. I know $100 is not going to be important, and therefore we're going to request you to waive it. It's more so on the nice to have side, but with kind of the alternative ones, it really comes down to very nitty gritty that I just can't think of off the top of my head, but it tends to happen a lot. And it's always it's important to think about what to ask and to think about what they're trying to achieve. Don't take to say, hey, like this, and there's only one way to roam. It doesn't work that way. A lot of times kind of think through, and maybe sometimes even for people that's not necessarily with an audit background, it's important to think about, to ask, say, hey, what are you trying to achieve? Let me walk you through our process. Based on that, is there a way you can request something that's different that will be less taxing?
I have one pet peeve for when I conducted audits, by the way, I was guilty of this. Now I know better if I were to ever go back to that life. But we send these detailed listings for general ledger accounts that are in scope. And then, so it's a bunch of transactions. And then we give them the entire GL listing, right? The roll forward from beginning of the year to the end of the year. And for an expense account, oftentimes there are accruals. And those accruals are really kind of like estimates. And those accruals typically go in and out. So I accrue $1,000 for this particular account at the end of the month. Beginning of the month, I reverse the accrual and I wait for the invoice to come in to true up the expense. And then what I experience often is the selection of those accruals, and proving out the completeness and accuracy of an accrual can be a little difficult, like discussing that with the auditor. But oh, by the way, these accruals all net out. Like if you add up all the accruals for the year, they all sum up to zero except for the final accrual on like December 31st or whenever your fiscal period year end is. So to me, that's like an example of when the auditor gives you a request, you don't have to kind of go to the ends of the earth to try to meet that request. You can go back to them with questions and also challenge them on whether or not this makes sense. Oftentimes, they don't even know that the amount they selected is an accrual. And so it can actually improve the process as the year goes on, as the years go on in your auditor relationship. So I would always, I tell the team all the time, like when they're asking you something and it's not something that you can pull together and call it 2 to 3 minutes, let's talk about whether or not they're making the right requests or whether or not we can go back to them and make some changes. Because I wish that, and this is when I was in client service too, I would change some things that I did. I would always default to, or I should default to, asking for things that the client is already doing. Right? Because like you're a controller now, I'm the CAO at Brex. There are documents and things that we do to ensure all the numbers are correct. They may not be the same as every other company that the auditor looks at, but that's part of their job to learn what it is that we do through walkthroughs and this process, if that makes sense to you.
Yeah, I would say kind of 2 quick advice. One is with those kind of things, when you do have a customized list that you end up providing, it's good to make internal notes that you provide the same thing next year. And then another one is when there's something that you really struggle with, unless it's a new request, ask for what was provided and acceptable the previous year. Chances are they're going to be acceptable again this year.
Yeah, I mean, we've had a joke on the podcast from time to time about auditors just kind of looking at the prior year file and doing it again without understanding why. But on the other side, I know as a client, sometimes we revert to that too, right? I would prefer that you kind of take what we did last year because we already have a preparation of those files so that we can have a more repeatable process.
Also, having been on the other side, just keep in mind different sets of eyes end up being on the audit. So just because it was right the previous year doesn't necessarily mean that it's right again this year. So it's a good starting point, but it's not an end all by any chance. I think you and I have gone on different audit projects and challenged what was done last year. And sometimes just because it was right, it was passed before, it doesn't necessarily mean there wouldn't be things that we would, as auditors, would dig in and find something that got missed.
So I agree with that.
For viewers to kind of keep in mind.
I think there's definitely a truth to maintaining a level of intellectual honesty, right? If you have that conversation about what was provided last year, you should ask why it's changed. But if there's an intellectually honest response, I think that's fair game at the end of the day. And, sometimes there's some good that comes out of it for your own process as well, right? How's your team structured today?
So I actually have my team structured functionally. So I have payroll, accounts receivable, and billing. It's more for the order to cash process. There's the procurement team, so procurement to pay process, general accounting, and also I have tax and compliance. So it's kind of very functional driven, and I make sure each of the functional team is led by a functional expert. And
then tell me about your main, what are some of your major priorities across these different functions, whether it's for the rest of the year or even into next fiscal year?
So in general, I tend to work with the functional leads on each of the functions to figure out what the priority is for the function. So for example, one of the priorities for my procurement function this year is on vendor renewals and negotiations to see if we can squeeze some extra dollars out of that. So that will be but that's a priority specific for my procurement team. One of more kind of cross-functional is we've just recently completed an implementation of Zora Revenue. So it's an automatic revenue recognition system that we just implement, and that cuts across my billing team and my general accounting team.
Are you using Zuora like end to end? Like what parts of your order to cash process are you using the tool for?
So we use Zuora for billing, which cascades down to the revenue recognition associated with it. Our collections also gets recorded in Zuora. So so my accounts receivable specialist would use that also as to kind of record the cash come in and like do the cash application and stuff. So I think basically our full order to cash process is within Zuora. Well, order process starts from Salesforce, but then it feeds into Zuora.
I'm always curious about this. On the cash application side, is that automated between Zuora and your bank that does the collections, or how does that work?
I don't think we do, but again, we are very B2B, so we don't end up with a lot of customers.
Okay.
So that's why we pay extra attention to the application. And I think it's mostly manual by choice.
So before you had Zuora, what were you using?
So we've had Zuora billing forever, but before we had Zuora revenue, we actually we use Zuora billings revenue recognition, which is basically how much we bill becomes revenue with like a little bit of adjustment. But anything related to SSP what's it called?
Standalone selling price?
Standalone selling price, that's
SSP,
right.
yeah. It's a 606, it's a ASC 606 term, yeah.
Exactly. So with regard to those kind of things, we end up doing a manual calculation, which obviously very taxing on the team and very prone to mistakes. So then that's kind of the impetus behind doing the implementation.
So it sounds like you guys were getting a bunch of these kind of like non-standard contracts. And because, you're B2B, so any one of these contracts can actually be material to your reporting and your business on a month-to-month basis. So my experience with this, when you have a lot of non-standard contracts, you typically have a big kind of revenue accounting team that's poring over the contracts to look at the non-standard terms and figure out how to account for them. Walk me through the before and after and how you manage that change. And it sounds like a change for the better, but how did you ensure the before, like that? How did you ensure that the after of the implementation was still at a high enough standard for like recording accuracy?
So before, what we end up doing is we record during the year just using Z-billing with a couple of kind of simple revenue principles, like, if it's subscription, recognize it ratably over the period. If it's like some kind of work order, we recognize it at the end of at the completion. That's kind of just very simple terms. And then at the end of the year, after we finish the fiscal year, before we start the audit, we spend a couple months with one or two people going over the contract and trying to figure out what the special terms mean and what the corresponding adjustment is with Excel files.
How did you even find the accounts that were non-standard or had special accounting needs?
We do like a reporting search. So luckily a lot of what we do is pretty standard. Like even though we may sell several products, they're all recognized ratably, or they're all like duration based.
Sure.
So those we don't need adjustments. What we need adjustments for are the ones that contain work orders. So we do a search to figure out what those are and do the analysis across that. Obviously, I help the team kind of put together an Excel template to you do this kind of input and then it calculates. So at least the calculation pieces is automated, sort of. But then the identification process still is pretty manual. You have to manually input all that information. And when you do, mistakes can happen.
So then, so now you're doing the automated revenue recognition from Zuora. How did that change happen and how long did it take?
So first, it's very long. It's literally 2+ years in the making. The reason being is we started that process with kind of a discovery process. And then we realized that we were not on the most recent version of Zuora to allow for transition between Zora billing to Zora revenue. So we had to stop. We had to pause our Z revenue implementation to do an upgrade of Z billing. And then, so that took us close to a year to complete. And then once that's done, we then had to pick up Z revenue again. And because, remember I mentioned before that, we were doing revenue recognition based on Z billing. And the migration actually caused issues with Z billing. So that's through even the regular revenue recognition off the window. So what we end up having to reach, instead of every year when we just pick the ones that had some components work orders to do our manual revenue calculation, we actually end up doing the manual revenue calculation for every single subscription that we have, every single customer, every single subscription. So it end up being a Hercules effort to do all the recalculation. The only silver lining coming out of it is because we did all the recalculation, the comparison between what it should be and what Z revenue calculates is already there because you already have what it should be. And then you can do the comparison against Z revenue to make sure that Z revenue is calculated as the way it is.
How is it that did you find out mid-implementation of the revenue module that the Z billing instance needed to be upgraded, or did you kind of know that all along even before you started the process?
We found out midway.
Oh man, that's really unfortunate. Is there? Is there anything that you could have done? Yeah, go ahead.
And then we found out after the billing implementation that the revenue recognition was completely off.
Oh no. What are the lessons there? Like, what could you have done, or what would you have expected to have been done differently, like looking back?
I mean, a lot of those things kind of, I think the decision that we made long time ago to stay on an older version of Z billing, we just didn't realize how much it was going to haunt us. I would say that's probably the biggest takeaway in that case. I don't know how otherwise. Obviously, Zora should have communicated to us that is the case, but also it's probably, if any other lessons learned, I would say if you were on an enterprise system, you probably want to somehow stay on their latest version, because otherwise this kind of things can happen.
That's actually a really interesting point. I almost see this story about change management as the impact of not doing the change management, right? You hear stories about companies that, they've been around for a very long time, and like they still have systems that are coded in COBOL right? And I mean, now you're talking about a computer language or some kind of language from like decades and decades ago, and no one even knows the language anymore. And it's tough
the only people that know are retiring.
Right. And it's one of those things where if you don't do the change management in a timely fashion, you accrue this enormous amount of tech debt such that when it is time to really, like when your back's against the wall and you have to make some kind of change in your system, you have so much catching up to do. And you do this to your effort to, I'm not going to brag. This is not a brag, but like I'll give the other example. And we have the benefit of kind of like implementing all this later on in today's world. But we recently, in the last 2.5 years, we started our SaaS business because we sell seats or subscriptions to manage expense on our platforms called Empower. And as we were rolling it out, we did the billing and the revenue recognition at the same time on NetSuite. And yeah, the implementation, it was a change management process. We had to work with our billing team, and then we have to go through the end-to-end design of like, okay, this is how we're going to get the data from Salesforce into this. This is how the bill's going to show up. This is what customer service is going to do in cases there are questions. This is how we're going to do the cash application, et cetera. But, the idea is like we implemented that, and it didn't take 2 years. It took like, 3 months, call it. And that's, I think those are just two very different extremes where if you have the opportunity to do the change, and you don't want it and you can afford to do it now and not defer it, I would always recommend that so that you don't kind of fall behind, right?
And to be honest, I still consider us lucky. Imagine us trying to do it in 5 years, because it's like it's only 1 or 2 people doing a month's work. It's not the end of the world. So I do credit our CFO for actually making that decision, because it could have been a lot worse. Right now, we were dealing with like 700 some customers, like 1,000 some subscriptions. Imagine double that. I don't think one of us will have any time to rest to be able to
Right.
get there.
So when you were going through the updates for Zora, how did you engage your cross-functional partners, and what was the impact like across the business as a result of this?
So in terms of this being cross-function, obviously the finance team is involved. So they need to be kind of kept in the loop with regard to when we would actually do any kind of revenue changes, because with this kind of implementation, we do anticipate Zora revenues doing it a little bit differently than how we historically did it. We do anticipate like true up. So keeping them in the loop was always important. But more so, we really work closely with our business systems team in terms of doing the implementation itself. And they're the ones that run kind of project management on our end. So we had like daily stand-up meetings, 1 to 2 hours a day, really having the business system team that will eventually take over managing of the revenue, and then us kind of always on the same page and all kind of doing that in tandem was really helpful.
Did you get any pushback from anybody?
I would say the biggest pushback in this case was actually working with our implementer.
Oh, interesting.
Yeah, because
Okay.
our implementer is very technical. And one of the biggest...
This was a third-party consulting service?
Exactly.
Okay. Yep.
So one of the biggest challenge we had early on was actually configuring the system. So when they started configuring the revenue for us, they were like, oh, do you want option A or option B? Except we don't understand what option A would do and what option B would do. And this kept happening, this kind of dance kept happening for, I think we had 2 or 3 weeks of that, with us not able to make any progress. And then I finally like, look, this is not going to work. We're going to start with our use cases. We're going to tell you when a particular scenario happens, we expect the system to behave this way. Let's go over what are the common scenarios and what are the common expected output. And based on that, you are business analyst, tell us whether we should choose option A or option B. And that kind of unblocked the whole... Obviously, there were other things, but that was the biggest blocker at the beginning.
Yeah, I think, and that's something, I mean, when we talk to our clients, it's like that. When I work with our vendors, it's like that. I think it's always a red flag, by the way, when I talk to a vendor and all they're doing is talking about the features of their system. I think that's a red flag, because that means, the product's the product. I'm looking for a solution to my problem, right? And the features, they're just like it's just like a list of things that it does, but I don't know how exactly it's going to solve my problem. And I think that's where, if I were to give advice to folks that are on the sales side, that you have to find the pain. You have to find what it is that your prospective client, your client is looking to solve. And then you have to connect the dots for them on how it's going to get solved. Because otherwise, you represented A or B. You're like, well, what does that mean? I don't know how it's going to solve my problem, right?
I'm sure we're not the only one dealing with some of those implementers that are very technical. And so then just think about, at the end of the day, they're here to solve your problem. It's not our responsibility to tell them if it's A or B. And honestly, if we know, we can do it ourselves. Why are we paying them to do that implementation? We know all the answers. We actually pay them to figure out how the system can be configured to fit our specific process.
You mentioned that your CFO was the one that kind of made the call, even though it would be, call it a 2-year project. What was that? What did that executive sponsorship look like? And tell me how that worked in the company, so to speak.
Yeah. So executive sponsorship, obviously at the beginning, it's approving the budget that's needed to kind of do any kind of change management. Obviously, a lot of times it's implementing a new system, but sometimes also potentially upgrading a role or adding a new role. So I would say the first piece is definitely the budgetary support. And honestly, I think that's the biggest piece. especially as we kind of, obviously when he first signed off, he didn't know that was going to be a 2-year project either. But also the other piece of executive support is the continuous support of, one is you understand when people take on a change management, they will have to make some sacrifices on their day-to-day job. So for the executive team need to understand what that means. It could be like, oh, your month end close is going to be a day late because your team's working on something else. So having that understanding of the implication of change management in terms of not just in terms of on the things being changed, but also the implication in terms of prioritization would be really important. And then the other piece, kind of resource management, obviously there's the initial budget that you approve, but also similarly, as we go through the discovery process to understand, oh, some of the things that you might not have planned out, like whether that means, oh, we need additional man hours, we need to go hire a consultant to kind of support this. That's also equally important because you can't expect people to deliver something when they don't have the right resources to support it.
So you had real like commitment on this top down. All those, that's obviously, and I've experienced this too. It's really important to do that, especially for such a significant project that's going to take such significant resource, and frankly impacts the company so much because without your billing system and the revenue recognition, you don't have the top line numbers or collections that you need to actually be a business.
Yeah, I would say one other thing what I want to add is also whoever the executive support need to understand that people make mistakes or like unexpected things can happen. Keep an open mind to that rather than people going into it and then you just say, hey, you're like scolding them for making the mistake. You really want to encourage them to say, hey, what did you learn from it? And then also encourage to say, hey, I'm glad that you let me know now instead of like 3 months from now. Mm-hmm. I remember an audit partner who had a famous saying says, bad news doesn't get better with age. And I think it's super important to keep that in mind. And
it gets worse, actually. It starts to rot.
Exactly. Yeah. And I think it's a very timely saying. And just you need to kind of, as executive, obviously it's never good to have the bad news, but keeping an open mind and really encourage people. Just think about you dealing with your parents. When your parents kind of scold you and everything, you weren't gonna want to hide like whatever bad thing as long as you can, right? So as an executive, kind of keeping an open mind to encourage that would actually help the entire company because people will be more willing to come to you when things go wrong, and they will come to you in a more timely manner, and that would really kind of save time and effort in the long term.
So 2 years project is implemented. I'd love to understand if it solved everything, or what are the things that are still hanging after the implementation?
I would say with more automation, in general, it's obviously better. But then that also means sometimes before that, when obviously you're always going to have anomalies, right? People always have to come up with creative ideas to sell the product. But sometimes that creates kind of downstream effect on billings that before when that kind of things happen, billing just does whatever to kind of maneuver. And now you have a revenue system that's sitting further downstream, that something that you on the billing side now cascades down to create anomalies on your revenue side. And so before that, maybe the impact wouldn't be as big. When you do this kind of maneuver, now it's bigger because that creates anomaly on the revenue side that you now have to catch and adjust accordingly.
This sounds like one of those situations where actually when you're working in Excel, the system, which is spreadsheets, it's so flexible that every single instance that you run through your system, you can handle in Excel. But when you automate it, even though you save time individually for every single one, because you're not doing the manual work, whenever there is a one-off, it takes extra time to kind of configure that one contract in the system or to do a separate process, et cetera, right? Because you're not used to it anymore. Like, is that the right way to think about it?
Yeah, absolutely. You never should automate in a way that doesn't allow exceptions. is the best way I would describe it.
Yeah, that makes a lot of sense. So having been in client service, and there's oftentimes a kind of persona that I've experienced from those people who are in client service, and now that you are managing your own team of accountants and doing the controllership, I'm curious, like, how you think about team management and what's your definition of a high performing team?
That goes back to how much I think Big Four really shapes. And I think it's in a really good way. One is encourage people. A lot of times you encourage your team members to step up. So that means maybe I have my even just kind of accountant managing our accounting intern, right?
Mm-hmm.
So like they were like, oh yeah, I don't have manager in my title, but guess what? Now you have a junior team member that look up to you and kind of you're going to be their go-to person. So I think this part of encourage people to step up really comes from the Big Four culture. And then the other part is where really just with that, also it's helping your team career pathing, kind of seeing for individual team members, where do you want to go and figure out a way to try to accommodate that. With that said, obviously, if you have a job, that needs to be done first, but keeping in mind where they want to go to help work with them collaboratively on their career can really go a long way in terms of retention, but also in terms of people willing to not just do 80%, to give you 100, even 120%, because when you think you have their best interest at heart, they will will do more. They will also go above and beyond.
I often think about my team, obviously from a perspective of getting our deliverables accomplished. So we have tasks every month, we have reporting, we have week to week stuff. But another thing I always stress is giving everyone stretch opportunities. I always want to have some kind of stretch opportunity for every single person on the team, because they need to be able to upskill themselves. They need to be able to, grow their career. I want that for them. I don't expect any of them to be in the same job that they're in, call it 2 years from now. And so that to me is like how I try to drive a high performing culture, if that makes sense. And, I will say one other thing. The thing that happens is, when that happens, they'll expect a promotion, or they'll expect, because they've exceeded expectations. If they hit a stretch goal, then it's something that they put on their performance review or self-review over the past year. And that's the one thing. So there is often this sense that I'm in this role for 2 years, so I have to be ready that in 2 years I have to find someone else. And so that's but I'd rather have that and get kind of the next best athlete, so to speak, in the seat. And hopefully that person matriculates, maybe hopefully gets promoted within the team, but, oftentimes it's actually somewhere else in the company. I've had that too, like accounting folks go into finance, or even some go to, our credit team here in other areas. And I really enjoyed that in this role at Brex.
Absolutely. But on the other hand, another thing I learned kind of contrary to that is it's really dependent on what they want. I have obviously have team members like exactly like you said, like want to get the next step, want to go next level. But there's also team member who's happy with where they are. And I think as long as they are concrete, they're still delivering, that's not necessarily a bad thing. It's the stretch goal is good, but only in terms of the things that they enjoy doing. I've had one team member who's like really enjoys billing, but I was like talking about stretch goal, say, hey, let's billing collections kind of go side to side. And he's like, no, I don't want anything to do with collections. And sometimes you need to respect that.
I agree with that. It's definitely a balancing act in terms of managing your team and the different personnel that you have. Jessica, this has been a great conversation. I love all your stories about your journey for Witsora and implementing the new billing and revenue recognition process. We always end our podcast with a section called Finance Leaders Are Fun Too. And I'm just wondering if you have any funny accounting stories or jokes to share.
I'll probably end with a kind of a Big Four. I think it's pretty common among the Big Four people. We always joke about that. And actually kind of there's reality to that is whenever you tell people that you work for an accounting firm, they automatically ask you tax questions. Even though like a lot of us don't even do our own tax return just for perspective. Mm-hmm. They ask you tax questions. They assume you do tax returns.
Okay, yeah, I'm Chinese too, right? And I know you're Chinese. And when I told my parents that I was going to join Pricewaterhouse, first of all, they've never heard of PricewaterhouseCoopers. And then I was like, and they're like, oh, what is that? And I'm like, oh, it's an accounting firm. And they're like, you're going to do taxes? I'm like, no, I'm going to look at the financials for a company, and then I'm going to make a report and all that. And they're like, that's the tax return that I get every year from my CPA. And I'm like, okay, yeah, I'm going to do taxes. And sometimes I just, it's not worth talking about it with my parents. I think. I mean, now they know, like almost 20 years down the road, like they understand that it's a little bit different, but that's funny.
I think it sounds like it's pretty common across all Big Four that we run into that. And even though if you look at just Big Four accounting firm, tax is like 30% of what they do.
Yeah,
Somehow
I mean, it's not insignificant, but it's definitely, yeah, for sure.
Yeah, that represents 100% of that.
Yeah. Jessica, thank you very much for joining the show today. Really enjoyed talking to you, and thank you for all your insights.
Thank you. Thank you for having me.
Thanks for tuning in to Controllers Classified, presented by Brex. Brex is an AI-powered spend platform with global corporate cards, expense management, reimbursements, and travel. Visit Brex.com and follow Brex on social to see how they can take your accounting game and your company to new heights.
Hello, everyone. Jack here. Hope you've been enjoying our recent episodes of CFO Thought Leader. Please know that I don't take for granted this opportunity to serve you. Your time is valuable, and of course, so is the time of our CFO guests. I'll admit to you on certain weeks, I will pinch myself and say, hey, I get to do this for a living. I speak to all these impressive leaders. Undoubtedly, there are more aggressive interviewers out there, some who leave no stone unturned. But our swim lane is for finance leaders only. And those finance leaders have a unique style of leadership, one that is rooted in the burden of trust. In light of this, finance leaders must take great care not to forfeit this trust as they step into the role of being a more expressive leader. And that is what CFO Thought Leader is really about. That's why I try to remind myself week in, week out, how fortunate I am. Still, I need your help. Tell us what we're doing right. Tell us what we're doing wrong. Email me your comments at jack@cfothoughtleader.com. And please visit cfothoughtleader.com. You'll find a listener survey right on the nav bar. As always, thank you for listening.